Hi traders, I'm going to do the wrap up for 2009 for the Key Equity Hedge. So we finally got out of that long trade, or the last short trade, which ended up giving us a whopping 3.5 points. But that's okay. We ended up for each account. I'll go through the smallest account to one of the largest ones we had going. So we ended up 34% for the E-minis options. They were similar sort of spreads to the large S&Ps. We're 45.78% for the $100,000 account, so that's not a bad return for $100,000 throughout the year. The minimum trade management. 500,000 was 45% again, and same with the $1 million account. So that's not too bad for a system which is really planned on risk management rather than making explosive profits, even though it can perform well over near the 80-90% level, and it has previously, but we've sort of toned it down just to be absolutely sure that we've got our risk management right and we're protecting the capital. So the question you've got to ask yourself is your current system able to handle a 100-point move? Is that going to blow your account up? Have you got protection? Have you got a hedge? Have you got a plan? Have you got plan B if that happens? So we know that this system has that in place. If we have a 100, 200 point move in a week, it doesn't matter. It doesn't blow. It might blow our spreads up, but we've got that covered on the future side with our hedge. So that's the whole point of having the protection. So you may not make massive amounts of money each month, but you're just slowly ticking away and you're making a profit each month, which is the long-term goal of the system. So for those that actually the spreads can be set from the 17th, our last expiry period finished. So we've had some members that have gone and set again. So I'll just take you through the futures trades you've had since then. So we finished on this stop out here. I'll just go to the trade. Don't forget you do get TradeStation for free for 2 months when you join up as a Key Equity Hedge member. So we stopped out here on the 18th, and that was our short trade was stopped out. So then the guys that the traders that went on and set again once they got that new long position, which is here. So once you get this long position, which is the market going through this green cross, well, you can set another spread because you've got your protection on your future side. So what you don't want to happen is go straight into a spread once we got stopped out here. So then say you finish your expiry period and you're just waiting to stop out of this futures trade. Okay, you're out of it. You set your spread, but then if it was to go short again and you miss the trade, or it was to go long and you miss the trade, well, you don't have any protection. So the further that the market moves without the protection, well, that's some of the points that you could be taking back, which is getting taken off your option spread. So it sort of evens out. You've got to take the points when it runs. So that's why we have to wait till we get in a futures position. So that gets in here, and now that's gone up about 8 points. It's gone straight up, and they're in a long. So they'll be battling away with this trade through a Christmas period. I'll be back to set another spread around about the 3rd or 4th of January after the holiday period and having a bit of a break. But I'll be keeping an eye on the market and doing an update for the futures side of it, just so you're on the same wavelength with your trades, so you're not missing any. I'll do a check. And if you've got any questions, just email me at admin@keyequityhedge.com. So that's it for the year. We've had a pretty good year. We've had a losing option spread, which is great to show that the futures side of it brought back as a winner, even though the options were a loser. And we've had a losing futures period, but it showed that the options were a winner, and that chewed away some of the futures loss. So it just shows how it works so well as a team, combining the two methods. So have a great Christmas, and I'll be back in 2010. So thanks for all your assistance throughout the year, and I've thoroughly enjoyed it. Thank you.